Hello, everyone. Welcome to the weekly Delphian meeting. Thank you for tuning in. So our agenda today, we'll go through our regular market update. And then, we have the Q4 earnings results that we'll go through. I did post that on the share drive, so you guys can access that, excuse me, on your own time. And then we'll have Joe's analysis at the end. So let's get started. Okay, SPX Russell still in one, been a long time. Still chugging along. Pie wise, from last week, pretty much flat. Um, I think, you know, we're still overbought, above 45, and state ones is overbought. So just kind of hanging right around that 45 area. Let's look at the actual charts here. So I think our last meeting was about here. Yeah, right around there, 46. So we're pretty steady Eddie since your last meeting there. Obviously, SPX has still been grinding higher. Russell's trying to break out of that 2100 still, but as far as the other states here, I didn't see a lot. Everything's just kind of sideways as far as the market pulse. So I think, more importantly, down here, you can see our highs, right? So it's just been a continual grind higher, and, the highs are basically telling us that with all these pop-ups and pretty much flatlined new lows. So, I think we just have to be kind of watchful for, the market starts flattening out, and then we start seeing some lows. Um, you know, that's what we kind of have to be on guard of. But right now we're just, crushing higher new highs. That was 21st last Thursday, had 702, 783 back here in December, but it was very strong. Yeah, and this is basically confirmation of that bullish trend, as long as this keeps intact here. So yeah, nothing else on there. Bullish bears, same kind of story, just hanging around that 60-ish. Let me listen. So that was our last meeting, 61, right, 61. But from that time, SPY was about 510. So now, a little higher, get up in 520, but a little higher, just kind of slow, steady grind. So let's look at the charts here. So we'll obviously off the board here. um, but I wouldn't like point out this. That's the best state one since '07, 19%. So we're actually getting pretty close to that. It was still a ways off on the maximum days, but pretty much double the average so far, and triple the average move. Um, so obviously been a banner state one here. Um, Not too much we can glean from here other than it's super bullish, and we know sometimes state one can be like this, and then these type of moves, extended long runs up, only happen in state one. So definitely this time is getting close to a record. So let's look at the charts here. So let's pull up the 20-day also. Well above, 200 and the 50, but this 20-day is kind of, I would say, near-term support that we want to watch. You can see it's, let me get the tool here. Yeah, it's been providing support. I think it's only closed below that once since this breakout here back at the beginning of November. So this level Obviously going to be important for this trend, this momentum trade. We use right now the 50 is, the most important one for Russell, and I think the 20 here on SPX, at least this time. Obviously 50 is also important, but since the 20 is acting like such strong support on this momentum run, I would kind of key off that too. So, bottom of the range here, 5,000 looks safe. I mean, the 50s pretty much right above that. Let me see what those prices are. Yeah, so 50s at 50, 30, and then your 20-day support level is 51, 52. So obviously to the upside is going to be 5,400, the top end of that range. So that's where we are here. Very strong move for SPX there. Russell, totally different story. So, we are near that 2100. I think we touched it today. So like I say, the longer we stay up around here, the more likely it's going to be that we break it. The high in this move here is like 2011. So this is our resistance area, target 1 and 2. So that's the primary resistance. So obviously the top is going to be target 3, but that 2100 is right smack in the middle, 1 and 2. So we touched 2100, pretty much went straight down after that, sideways for a couple days, from that low. Here's the high so far in the middle, 2115 or 16. And I think today we did touch 2100, so we're right above it right now. So the longer we're here, as far as Russell, the more I would expect to break through that. So if we're hanging around it, the reversals always happen kind of like this, where it touches it and then just like tanks, right? So if we hang up around there, that's showing us that there's support to try and break it through that resistance level. So we'll see if that happens. It looks like it. It's trying to. So I wouldn't be surprised if it did break through and hold above there near term. So let's take a look at the chart. So 20-day, not a big deal on this one. Sorry. Tool. 50 days, more important one here. You can see same thing. Pretty much strong support, since the breakout here. That was mid-November. So I think this is closed once below, kind of like that 20-day. So this obviously critical level. Things are kind of coming to a head with our 50-day here, which is 2020, and then the top end of the range, which is 2100, bottom range 19. So that's right on to 200. So you'll have to see if we can break out. Looks like they're, really wants to at this point. So, so I mean, we make runs up at it and then, it turns around. But, this support right here is really kind of telling me, after this basically, flush down here, saying that 50 is still in play. So, I'm kind of expecting us to break that 2100, especially if rates cooperate. So, the 10-year, down a little bit, 4.2 about. We got up around 4.3 something here, 4.34. So come down some. So this one's the most correlated. The Russell is most correlated with these movements right now. So if this thing at least stays here, or even better moves lower, then I would expect Russell to break through that 2100. So okay, balance sheet slow moving. Yeah, we're right above 7.5 trillion. So Last reading was the 20th, so within the next week or two, should cross that threshold. So I haven't heard too much about like reverse repos or any kind of fallout from, that BFTP, lending facility, twilighting. So nothing so far really with the bank. So we'll just keep an ear out for that. Fed over a month out, pretty much no cut, really no change. This thing hasn't changed much in a while. So first cut right now is kind of predicted for June, and then year end pretty much the same as our last meeting, which has been pretty steady for over a month. You can see 3 cuts overall. So that's kind of where we're at there. Before I open up, I did find a pretty interesting little chart. So these are all the recessions, and this is Japanese. I just found this on Twitter. I thought it was interesting. So because they just raised their rates first time in a long time. So the last kind of 3 times they started, we had recession. So that's 90, obviously 2000, and that's a great financial crisis. So thought it was interesting. I'm not saying it's some kind of perfect thing, but it's just kind of interesting little chart. So
Is that our recession or Japan's recession?
ours, I believe, because that's like COVID there, right?
Yeah.
It's like, I don't know what this recession was. I was too young.
Yeah, there was a recession then.
Yeah. Yeah, it's like 91-ish.
Yeah.
Okay. Yeah, just thought it was interesting. So all right, sorry. Okay. Anyone got questions, comments on the market? No? Okay. Let's so the email reminder I sent out, it contains that link to the share drive. So where's that stupid thing? Why do they always change things? Where's the little, there it is. So that'll be the link to the earnings trades share drive. So I put in all the Q1 analysis for all the different types of trades. And then also the results are in there for Q1. So we'll go through those kind of quickly. Also, you can access the plan just through this drop down to quarterly plan, and then you'll only have this one available, Q1 2024. So you can pull that out and take a look. So let's go through the results here. So overall, we had 41 trades, 9 were non-confirmed, so they estimated or didn't come through. But of the 41, I had 31 winners, so about 76% winners. Starting over here on the left, so we had 9 bullish pre-runners, 7 wins, so 78% win rate, pretty level risk here, keeping it around 1,000. 2 losses were very minor. You can see it's 117 and then 900 for 7 winners. So net profit there. Bears pre-runners, another kind of 50-50. So you have the previous quarter down here too. So obviously a better bullish pre-runner than last quarter. Similar for win rate for bears pre-runners, only 2 trades there. One very minimal loss, and then small profit there. So that was a profit. Vol rise, So 2 trades, both were winners. We had 1 non-confirmed. So these ones been doing pretty good. Non-mover, usually our best trades. So 6 trades. We had that one Delta. And it kind of happens almost once a quarter. Hopefully, we're not seeing, start seeing more losses than that. Usually one of them doesn't work out, but the other ones all kind of pick up. So 3,000 in profit. Max risk was 1,400, and all these risk rewards are really good, usually 2 to 1 or better. So these trades have been doing good. Bullish runners also did well. 7 trades, 1 loss, which was pretty minimal. And then total profits, there's your gain loss, $1,280 about. And we did have 1 high risk one here. So there's a few that kind of snuck through higher risk, but it worked out. Trying to keep it around 1,000, but sometimes these stock prices go up and the risk goes up. So 2 non-confirmed there. So bearish runners, last quarter was bad. We had a bunch of trades when the market just took off. So this time, not right now we're setting profitable, but we have 2 open trades. So this is probably going to end up another negative for bearish runners. So this one has been kind of the drag for us the last 2 quarters. So overall, based off all the trades here, about 6,000 profit on 41 trades. It's about 1,000 a trade. So, pretty good overall. 2 open trades and 9 non-confirmed. So that's the results there. Any questions, comments?
Looks good. It's not surprising that the bearish runners had the most difficult considering the uptrend we've been.
Yeah, just, we've been straight up since, pretty much October. So, end of October. So,
Yeah.
bear trades have taken it on the chin. This one's not as bad as last quarter. Those ones turned bad. So, okay, thanks, Adir. Anyone else? Okay, and like I said, you can access all those other trades in the share drive. That's a wrap for 2023. So on to Q1 2024. We do have 1 confirmed trade so far. 2 of them were estimated, but that would be a bullish runner for ACN, which I've been tracking. So we're up decent today, 339. So it's pretty much right near the entry price. We're a little higher today, so we got I forget how many days this one gave us. So this is 19 days. So looking good so far. Just kind of break even-ish. But we are higher today, so this should at least turn green after today's ACN hold. So, but like I said, you can go and take a look. We send out that weekly earnings email with kind of the week ahead, and you can always come into the earnings plan and look forward trade date wise what's coming up. 325, 6, 7. So I don't think so. This one, these are today, 1 estimated, 1 confirmed. So you can just kind of come in here and look, what's coming. So, and then, the daily alert is just this drop down here. You can see AXP go in, and it gives you the prices at right around 10 a.m. that we pull from our brokerage partner Tradier. So those are live quotes. That's what we use to track the trade overall. So, all right, any questions, comments? or push it over to Joe? All right, thank you all. You ready, Joe?
Yes, Josh. Let's see. Am I okay? I had taken it off mute. Good. Everybody, thanks for joining. A couple things. Sorry, about the disruption to service last week. We had two situations. We get data from a fellow in Sarasota, and their whole data center sort of blew up, and that cost us a couple days. So it was kind of out of our control. We apologize about that. And then I think we mentioned a couple weeks ago, Josh and I were up in New York last week. Shook joined us one day. I don't know if you took a look at that Quinnipiac game forum, but for those of us who've been around for a long time, it's just very uplifting to be surrounded by, 12, 13, 1,400 college students who are real interested in finance. Josh and I and Ashok presented a couple times. We had crowds. What would you say, Josh? A couple hundred in the rooms?
Yeah, probably.
Something like that. And, the rooms were basically full. We were thinking about options. This is not, we don't go up there and pitch Delphian. We're just talking about options and offering education. But in both presentations, we asked these college students, and they're generally juniors and seniors, how many of you have traded options? And in both presentations, probably 80% of the hands, went up. So, I think that kind of surprised Josh and I a little bit. There were a lot of people who did, the same thing last year, but I'm not sure it was that high of a percentage. So just interesting, to be surrounded by such, vigorous, smart, young people. So, that was the end of last week, and that's why we didn't have the meeting last Wednesday. But so just as far as the markets, I don't have a lot to say today, but a couple charts that I'll review just to review the bull market. I mean, we're clearly in a bull market. Surprises will continue to be to the upside, I believe. Bear markets, throw a dart, on average, I would say they last between 3.5 and 5 years. We're a year and a half in. What's the catalyst? Is it the AI revolution? Maybe. I would tend to think yes. But, it's a bull market. So, if you're trading, I think it's just a question of whether it's indexes, individual issues, looking for points, with your homework to be able to get in. And, the market over the last month or so seems to be broadening out, which was a complaint of quite a few people. Maybe that was after earnings. Certainly, as we've been talking about for quite a while, earnings seem to be driving this thing. So I'm just going to pull up charts going back to the beginning of the bull market. I think we can agree that was October of 2022. And this is the SPX. And I basically pulled, these charts are, that kind of first run up from October to about, July of 23, I think is where we are here. Is that initial run up, So, I just wanted to pull up both SPX and DX. And, we had the bottom. We're in a state 8. And I had months of chop from a state perspective. But, at the time, certainly I had no idea it's the beginning of a monster bull market. But, in fact, that's what's happened. Lower highs. It's kind of interesting with both SPX and NDX. Not a shock, but interesting. We chopped around in various states for months. And then in the spring of 23, off we went. And we went off into, the July period. And, rates going up, recessions coming, the whole thing, that's why I love the charts and not so much the excuses or the stories that are out there. But there's SPX. Here's NDX, essentially same time period, coming out of, the sell-off and then lows in October of 22. Not quite as many signals, but a very similar time frame, maybe just a touch earlier, where we went into state one in 2023 and, ran into the mid-July period in NDX and then rolled over a little bit. What I wanted to pull up next, and this is that late July period in 2023. So we were at that point 9 months into, what's turned out to now be a bull market, and the pie. We were up into the high 70s in the pie, which I think just speaks to the strength in the overall market. And, before we get that pull off back into October. So here's XBX. This, I just wanted to, and this is in July, which was kind of that interim top before we went into the October, early November 23 lows. And, what I wanted to look at here was the distance, both in SPS and NDX, above state 3 targets and how long. So, this was that interim top, and, we were, maybe 200, 250 points, above target 3 in SPX, and, certainly a good period of time, but nothing like we've seen now. And there's NDX, which, I think went into state one a couple weeks earlier, in the neighborhood of almost 2,000 points above target 3. And here we are now. We are, better part of 500 points, above target 3 in the SPX. And as Josh said, and we all know, this market's just been on a tear. We, I don't know if you could call it a sell-off. We had a little bit of caution before the Powell conversation, and then off we went again. You can see how many few red bars, and certainly so few consecutive red bars, going back to last October, early November. So, how long will this bull market roar? On average, 3.5 to 5 years. NDX, again, just long time above target 3, and certainly the distance above target 3 has expanded there as well. A couple more charts because, from a timing perspective, XLK and XLC, XLK, I think was the first to go into state one the day before NDX. We're at 97 days. 146 is the max back in 2018. Excuse me. I went through the indexes, and what I found interesting, between maximum days, maximum moves versus where we are now, those numbers, were less similar index to index than I had expected. Some, the max days are 2020, some 2021, a couple go back to 2011, same with the max move percentage. So just found it interesting that there isn't more similarity in the max moves from a state modeling perspective. We've been talking about the possibility of just an extended period, in state one, which we get, and in XLK, it's 146 days, so still got potentially a long way to go. And I think we addressed this because Jared brought it up before, maybe a month or so ago. We did ask Ashok, and there's no easy way to have a sense, when these state ones are going to roll into state two, at least at this point. When he gets some more time, he'll do some homework on that. But at this point, no indication that any of these are close to rolling over to state two. The other one, XLC, I think was just a day shy. Yeah, 96 days. You know, incredibly constructive charts with very few down days, and you know, there's all kinds of liquidity, you know, out there. Earnings momentum is extremely strong, and speaking of momentum, I just thought I'd pull up the you know, one of the semiconductor indexes. I mean, you know, just the way this thing is picked up, you know, this year. I mean, talk about leadership and, you know, not a lot of down days. I mean, that's just not parabolic, but, you know, darn near close, you know, since December that moved to the upside. So they said didn't have a whole lot today, but I just wanted to reinforce the idea that this is a bull market. I think it's got a long way to run. And from a trading perspective, I think it's just a question of, you know, picking your spots, you know, for entry points. We're lucky enough to get a pullback. You know, from a numbers standpoint, you know, numbers, you know, stats that are coming out on the economy, we actually have a lot over the next 4 days. So, you know, it'll be interesting. You know, the PCE numbers come out on Friday, you know, year over year, month over month, core price, and all kinds of things there. ISM numbers on Monday, JOLTS next Tuesday, lots of numbers tomorrow. So it'll just be interesting to see if, you know, anything will give this market an excuse to pull back a little bit. At this point, really haven't seen it. So happy to take any comments or questions, but that's all I had today.
Hey, Joe, Dan here.
Hey, Dan.
How you doing? Yeah, looking at the
If I could
state
shake
modeling.
this cold, I'd be doing better. But
What's that?
sorry. If I could shake this cold that I've had
Oh.
for God knows how long, I'd be doing better. But go right ahead. Sorry to interrupt.
Oh, sorry to hear you have a cold. So, yeah, I'm looking at the state modeling. Has anyone given a thought of making a more dynamic state modeling charting? I look at the chart and it's, I mean, the indices have just, you know, like the SPY and XLK and everything, it's just blown so far past the target
Yes.
that it's kind of meaningless at this point. And I'm thinking there should be a way that it's, you know, that it could roll to new target points, even though it's in state one, you know, use some kind of momentum, moving average or whatever indicators to calculate, you know, calculate a new target, you know, based on the latest data. Is there anything?
Well, I'll talk. Yeah. You know, targets, Josh and I can speak to quickly because we've talked a little bit about, and Josh, maybe you want to talk about that target 4, but I think, Dan, you know, distance above moving averages is essential. We haven't systemized that yet. We've been talking about it, but, you know, and Josh, you know, recently has started to talk about this 20-day average. I think, to your point, the distance above is really important to keep track of those extremes. Give you a good point where, you know, you own the underlying, you want to sell some calls, you know, that's one measure that I use. But, you know, I think you're right. From a state perspective, here we are in ones. That's why, you know, from time to time, I try to go back in history. I still think, you know, I have a lot of work to do in terms of quantifying, you know, certain states in bullish, in, you know, the biggest bull markets, the biggest bear markets and things like that. But Josh, comments on states?
Yeah, I mean, you know, my big thing is like, okay, it's good for like trend analysis, but I think the real money is the levels, and we have talked about you know, using those as support and resistance, and we have talked about, you know, maybe, and you know, having Ashok look into do like a target 4, which is only triggered basically when you're above that T3. You know, so that would only activate, you know, if the price above T3. But Yeah, I mean, I think the real gold is the levels, my opinion. So
And Dan, one other thing, again, we just haven't had a chance to get to it yet. I think the speed getting from, state 1 to target 3, is important to the underlying potential in an issue. And hopefully one day we'll be able to quantify that too, where, if something goes into state 1 and it gets to target 3 very, very quickly, that would suggest that maybe there's a heck of a lot more upside. So we have some ideas for sure. Please don't hesitate, anybody to offer your thoughts, but we just haven't been able to get some of this stuff done yet.
Yeah, the speed is, I think that's important what you just stated there, because you can equate that to the slope of the chart. The faster
Exactly.
the speed part is, the steeper the slope, which is a very bullish signal. Do you guys get the data for all, like, open interest on everything across the different expirations?
Oh yeah.
You do? Okay.
Yeah. And I mean, another area, and especially for those of you who have, a handful of favorite issues, you can really get into the weeds. I mean, if something pops up, this unusual option activity, if you have time on your hands, and, the unusual option activity is for calls and for puts. Again, it's a multiple of 3. The order of the list is the magnitude over 3 times. But I think there's some absolute gold in there if you have the time, and especially if, some stocks, hit that list that you're interested in. I mean, the great thing about the platform, you can go back in history and just study so much and really, I think, increase your odds for a winner. But they're, yeah.
I agree, Joe. I was just thinking, is there a way to quantify the areas that are highly populated and open interest across the different expirations? Because those can likely be pivot points. And I'm wondering if you can come up with like the Max Payne theory, if you're familiar with that. You can quantify the open interest points, which are the areas of Max Payne. How hard would that be to incorporate something like that into the platform if you're getting the data?
Yeah, I don't think it would be hard. Our issue, frankly, is just bandwidth. That's our issue. We're ridiculous. Well, not ridiculous. We are a very small team, and there's no shortage of ideas. It's just our bandwidth, and we do think that in time, a shook will spend more time, but we don't need a shook bandwidth to implement some of the ideas we have. It's just hasn't happened yet. Hopefully, one of these days. We have a lot going on in the next 6 to 7 months. Incorporating cloud, which you've heard us talk about for quite some time. 20-minute delayed data, and we were talking about it this morning. Just our bandwidth is small, so some of these other things are luxuries which we want, but we're just not able to implement yet.
This is Dave. I've got a comment that I'd like to feedback to Dan there on the fact that we're over some of the targets for longer periods of time. There's always been sort of a irrational concept of why markets can be overbought or oversold for extended periods of time when it doesn't seem like they should. I don't know that there's a magical indicator, moving averages or whatever, that can bring light to why that happens. I would tend to guess it just has a major that sentiment, just overall sentiment in markets, in all the markets, kind of lead to momentum just carrying on until there's a reason to change it, which is kind of what things feel like now. I mean, we're grinding higher with what reason for grinding higher? Because we can. Sometimes that doesn't make a lot of sense, but if there's no big volatility event that you can perceive coming to the downside, why would you change? So, half of my battle is like trying to trade what I'm thinking versus what I think all the other market participants are thinking. So I tend to err on the side of what I think other, the majority of traders and investors are thinking. So I don't know. It seems to be working better for me than just going with my basic intuition, which tends to be kind of like early, if anything. Usually my intuition's just too early for one reason or another. Now, with regard to being over the targets for a long time, look where we are with volatility index. The VIX is at what, 13 something, or and it's way below a typical non-coming out of a pandemic. It's below where it normally trades in a normal period cycle of economic activity, and we don't have any high, unless there's a new war or a new, something that comes out, everything that's been in play, interest rates and geopolitical conflicts, and even the election this year isn't going to affect the next month or so. So why won't the market just float higher? I don't see why it won't. So that's the way I've been trading it. Anyway, so that's with respect to Dan's question. I think it's going to be difficult to try and find some indicator that brings a whole lot of light to why a target 4 or 5 should be even thought about. But that's just my thinking. We'll see what Ashok says. One question I had for Josh, and this totally different subject here, but Josh and Joe, when you attended the event that you were at, especially because it was younger people, I'm curious to what if you gleaned any insight on what a generation might be thinking with regard to certain asset classes, bonds, crypto. You already mentioned options, so it sounds like younger people are tuning into options more effectively as time goes on here. Is that a generalization to what you said kind of accurate?
Well, and I'll speak to it before Josh. The fact that, when we give our presentations, there are 4 concurrent presentations. So, and whether it's real estate, whether it's portfolio management, if they're coming to an options presentation, obviously they're interested. So it's not like that's a random poll of the whole 1,500 students, a little bit, already of a concentrated group. We didn't really, all the different asset classes are discussed over the course of the 2 days of presentations. We really didn't get into the weeds with students about that. Outside of the presentations, we get an opportunity to have a booth where we talk about, Delphian trading. And I would just say generally, the students really never talked about, asset classes. It was more about, what is the Delphian trading platform about. One of the 2 presentations, I did ask how many of you are bullish, and that was well over half, right, Josh?
Yeah.
Yeah, well over half. But your comments, Josh, on the game thing?
Yeah, well, I think, this younger generation, they're definitely more, when I was that age, options weren't even on the radar for like anyone, you just kind of start with stocks. and you check the newspaper every morning. So it's come a long way, but they're definitely interested. There's some crypto people, um, and then there definitely quite a few are like diving head into options, and then you just have your regular that understand stocks, and that's it. Basic questions, but there's a lot that are getting in options early. Definitely. I think as each year goes by, I just think more and more people are starting to understand the why options are useful, right? There's obviously a lot of people gambling, um, but strategically being able to use them. I think they're getting their hands around that pretty early on, and they have an appetite for it too. They're like really dive into it and ask good smart questions. So
Yeah, I think
Yeah,
there's
it's,
something that can be gained from like continuously attending an event that annual events that go on every year kind of thing. I used to like to go to the Money Show in Orlando because it was a good cross section of a lot of different investment kind of ideas from all over the place with all sorts of pundits appearing, and you could sort of get a feeling for how things change from one year to the next year. But the pandemic kind of put a quash on that because they quit having it. Now they're having it and they're charging for it, so there's not as many. You don't get the same constituency attending the Money Show anymore, so it's not as useful. But um, like I haven't ever attended the CES technology show. I think it's in January out in Las Vegas, but I was thinking about maybe that would be a good barometer to attend every year. If it were in Orlando, I certainly would, but I don't know whether I want to go to Las Vegas every year. But I think there's something to be said for when you can see this over the same kind of people coming to the same event and how they change. They're adopting new ideas or concepts or technologies. I think you can get that sort of feeling from a large conference when it happens. So I hope you guys are successful over the years of kind of grooming some of these younger folks into enlightened understanding about investing all the way around. Anyway, thanks
David
for the feedback there. I was just curious to how the youngers are starting to get what they're trying to catch on to and what they think is a fad, where they're. I'm out of touch with that segment of people these days, unless they're my nephews or something. So there's only a few of them. Thanks. Anyway.
Sure. Two things, just wrapping up on the game thing. I've been very fortunate to be part of it for 12 of the 13 years. And, the takeaway is overwhelming. And the takeaway is, we are in good hands with the next generation, hardworking, smart. I mean, Josh is, participated, the last couple years. And I think I'm not putting words in your mouth, Josh, but I think you feel the same way, don't you?
absolutely. Yeah. Very, very sharp kids there. So, and they're from all over the country. I mean, it's like schools I've never heard of, very, very intelligent.
Yeah. One example, University of Tennessee, Chattanooga. I met the professor there. I think he's participated in 11 games. He brought 24 students this year. You talk about life experiences for these kids. Most of these kids have never been to New York, and then there are some. I mean, it is a heck of a lineup of speakers. So it's a very good event. So we're very fortunate that Ashok was interested in sponsoring. And hopefully we continue to. Dave, back to VIX real quick. I mean, I remember, so this is 2016 to 18. Look at those levels on the right side. That's 10. So it's, and that's before, you know, we got all these other options. So it's not unprecedented that VIX is, you know, just, you know, at low levels. I mean, obviously the markets in this period did pretty well. That was obviously the 2016 election. So, you know, we've had low VIX before for sure.
Thanks.
So, you're welcome. And how about the audacity of the real estate ETF to go into a bearish state, even though it's only two? You know, we had everything in bulls, and incredible. All but one were state ones, you know, up till a couple days ago. So pretty unreal. All right, Josh.
Yep. All right. Well, thanks. Thanks, Joe. Thanks, Dave. Anyone else have questions, comments before we wrap it up? Okay. Well, thank you all for attending. We'll do it again next week. Thank you.
Thank you.
Thank you.